Good morning. What's going on, guys? Happy CPI day. Borderline's in the chat early today. There's no tick on the clock today when the music started. Oh, God. Well, good morning. I'm glad I woke you up. Oh, man. All right. Alrighty. Cool. Making sure audio is good, set up right. Right. Can you make sure your Zoom is muted? Like, mute your mic on Zoom. Up early. Gonna have to help the kid in a bit, though. Well. You better be back on for CPI time, because we'll have Mike on, and it'll be a party. Man, we're doing research on what? Man of many research. All right, let's see here. All right, let's take a look at the charts, see what's going on. Obviously, it's CPI day. Got CPI at 8:30, and yeah, unemployment claims at 8:30 as well. So 8:30, big, big number. We also still are waiting on election results, but we already know what's going on with that. Republicans will get the House, most likely lose the Senate. Where did my music go? There it is. So looking at the market, the equities today. Current daily finding support at the 200 moving average here. Seeing the same price action confirm on the 4-hour. 4-hour finding support at 200, finding support at this previous rejection area. Seeing a lot of exhaustion and support being found here at this 32.5 area here. We're now finding support at the 66 moving average as well, an area that we've found support here in the beginning of November. So looking for a potential rally this morning to fill some of yesterday's move, maybe to retest this liquidity grab here, and then we'll see what happens with CPI. I expect the Dow to be around 32,800 heading into CPI, get a rally, a little bit of a pop, and then we'll see if CPI, how it comes in, whether we break out higher or continue down lower. It really all depends on if we come in hot or not. Got your consolidated levels at 32,607 and 32,500. I'd expect us to get a little bit of a rally and pop out of here as we get closer to CPI. But we'll see what happens. Looking at the Dixie was getting a little bit of a ramp up this morning ahead of just everything. The daily chart now back and confirming we are creating a higher low here. And it seems like we're ready to continue on up towards 112. Gold, what do you think? Down or up? It's tough, right? Because it really depends on what the CPI print comes in. I expect the CPI print to come in hot, but I'm not as confident as I was the last couple CPI prints. Last couple CPI prints I thought was pretty easy. Coming in hot, market's going to go, it's going to go nuts. But this one, not as confident, kind of on the fence. Still think it's going to come in hot. They're expecting 7.9%. I was leaning more towards like 8%, 8.1. So still cooling off from last print, but still hotter than expected. So it's gonna be a tough one. But however, looking at gold's price action here, I'd expect it to come down towards 1680. I want to see 1680 come into play for gold. We have this nice break of structure on the on this downtrend dating back from March of 2022, creating these lower highs. We just broke through this lower high point, finding some resistance at this previous intersection of 1715, 1720, and now I'd expect us to come down, retest this move, and then continue higher overall. So we could have some bullish metals come into play here, finding some support here on the monthly, finding some support here on the weekly as well. However, keep in mind this is a weekly liquidity area, a weekly rejection area. However, daily showing a break of structure, and so I'd expect a retracement to then go up. 7.8 means gold up. Yeah, if 7.8 comes, if we get if it cools off, if inflation cools off, meaning we get 7.8, then I think we get a rip, an absolute rip in gold, like massive rally. Dollar's going to have a big pullback. Really, the dollar's going to dictate the move on everything. And if 7.8 comes into play, Fed's, good job. Fed's doing its job. Dollar's going to start going down because the Fed can now slow down their pace of rate hikes. And you'll see the dollar rally down, or not rally, but pull back, through 108 and even farther, seeing that monthly pullback here. So then, yes, if we come in cool, 7.8 or below 7.9, then I think gold gets a rally. If we hit 8.1 or 8, which really is still high inflation, not cooling off that much, I don't think we get a massive move, but overall I think that gold would come down. I think of it differently. If CPI comes in lower, gold might stay flat or even come back. CPI is hot, everything pulls back, and eventually gold rises in the weeks to come off sticky inflation. I don't know. That doesn't really make much sense to me, to be honest. The problem is the fundamentals and relationships have been a little skewed during COVID. You haven't had that inflation play with gold. You've had that inflation play with the dollar because people are expecting the Fed to take care of the inflation. And so if it comes in cooler, the Fed's doing its jobs and they can slow down rate hikes. So then the dollar falls off, and because gold's priced in the dollar and it's more or less an inverse, then gold should rally off of the dollar's weakness. So, if inflation resolves, there's less of an argument for metals, yes, but it's not really the case of inflation being in play for the metals. It's just the dollar's weakness. So, although I get what you're saying, that's not how gold's been trading the last 2 years, really. It hasn't been trading off inflation. It's been trading off of the relationship of, what's the dollar doing? So that's why I think if inflation cools off, we get a nice rally, a really strong rally in gold. just based off of how the relationship and fundamentals have been lately. But first, I'd really like to see a pullback in gold to fill some of this move from Tuesday. That would be ideal to try to pick some up around 1690. But right now, we're stuck in this consolidation. So you have the lows sitting at 1702. Consolidated high sitting at 1716. There's a scenario where that works too. In any world, if Dixie falls off from Fed actions, it will catch a bid. Yeah. That's kind of what I'm relying on, is just the Dixie's weakness. I think the Dixie and the rates will cause the movement across the markets based off of, you know, what the Fed's path looks like and if they're, you know, if they're going to remain hawkish or not. And so if the Dixie falls off, the rates fall off, then, you know, you would expect the market, gold, oil, all to catch a bid. That would be a I could honestly see that. To where inflation is still high enough to where it's uncomfortable, but cooling off enough to where the Fed, you know, has to continue slowing down their pace of rate hikes, to where then, okay, the inflation hedge on gold might actually come back into play. You see the, you know, so it could be interesting. I like that thesis. We'll have to see. I mean, we have an hour left. Let's see if there's any trades that we could take heading into CPI. See if we get any movement. Dollar's elevated through this 110.500 area. I'd like to see the dollar pull back and retest this breakout from overnight, from London session, to see if then we can get a rally on adhere. Had this nice head and shoulders on the Dixie. Looks like it's coming to fill that head and shoulders before CPI. Problem is, technically speaking, the Dixie's maintaining bullish structure and flagging at these highs here to then continue higher. Read a good article yesterday about how gold's relationship with the rates and inflation, how inflationary periods cause the Fed to raise rates. Higher rates reduce inflation, which strengthens the dollar. Stronger dollar is bad for gold. Yeah, no, exactly. It's exactly right. The Fed's tool to fight inflation is rates, which then in turn strengthens the dollar, and strong dollar is bad for gold because gold's priced in the dollar, and they're both safe havens for different things. But you're exactly right. Pound yen. Taking a look at pound yen. Seems like we're flagging in here. We have this high here, slow here, high, low. So we're flagging in here. So we're going to start filtering up, I'd expect, to create a lower high. And as we start coiling in here, we'll get that move one way or the other with CPI. I'd expect it to go up. I'd like the price action for it to go up here. because we are wedging and flagging at highs. Bitcoin bottomed out at 16,000 here. Low was 15,637, 632. Bottomed out at 16,000, finding support here. Trying to find support, but I don't think it gets any type of rally. If it gets any type of rally, it's most likely retesting this 18,000 drop before we continue lower. I think Bitcoin sees lower prices. Risk is obviously off right now with Bitcoin. Sentiment's not looking too good. Daily on the ES, pretty big bearish rejection at these lower high points. So when you see price start rejecting these lower highs, this trend line, you see a nice drop from there. So if that's the case, then inflation's most likely going to come in hot. Tether and other stable coins are starting to turn into unstable coins as a few hours ago. Really? Let me see what's going on with these. Oh, dude, damn! Look at yesterday my crypto watch list was a sea of red, and now it's a sea of green. I don't see one negative. Oh man. Damn, dude, look at this Tether market cap chart. It's about time everything starts collapsing, dude. I know that like a lot of people and firms had investments in the FTX, or the FTT coin, taking a massive fucking loss. What's Binance? Binance is going down next. Euro USD below parity. Euro seeing some weakness ahead of CPI. Dollar seeing some strength ahead of CPI. October 13th was the last print. Let's take a look at price action back from October 13th. So here's October 13th. You had into CPI, you had a drop in the dollar, and then it ripped. And today you're seeing a pop in the dollar. So, maybe that's where we start seeing the dollar puking and we see cooling off of CPI. Equities on October 13th. Started rallying into CPI here, and then they just puked. Equities aren't really doing anything right now. It's kind of chilling in this consolidation range here. I'd like to see it start picking up some type of momentum one way or the other ahead of CPI. Don't just sit here in this range. That's right. I was reading about that Sequoia research. It was like 100 mil. How much was it? Like some mils. Can't even freaking type. It was a because they marked it off. I'm trying to. It was 200. Yeah, $213 million investment to zero. Rip. Wow. $214 million down to zero. Poor guys. $420.69 million from 69 investors, really. Oh man. Rates, interesting area here. Broke through this 410, finding resistance, also finding resistance on the backside of this trend line break. And maybe we see the rates in the dollar puke today. That would be interesting. Everything is really setting up technically for a Dixie and a rates puke, which would give the equities gold a nice rally. What are you thinking, Mal? What are you thinking is going to happen with CPI today? What are you feeling on the equities today? Tell you what though, if the dollar pukes, I'm going to be loading up in some silver. But here's the thing with silver. I used to trade a long time ago. Haven't traded in a while, but Bornlum got me back in trading silver. When you get metals, when metals break out, you want to keep an eye on the gold to silver ratio, because gold to silver ratio is elevated. Silver outperforms, because silver has to outperform to bring down that gold to silver ratio. And so you'll make 3 times your money on silver over gold. And if you take a look at the charts on here, silver already retraced its move here from Tuesday. Gold still far from it. So silver's ahead of gold on that one. Silver's also coming down to retest and sitting on top of this 21 breakout point, right? This is where we broke out from. We actually broke structure, broke this previous high. Now we're in a bullish move, sitting on top of this breakout here, sitting on top of this previous pivot point. And so it has so much potential to the upside towards around 22. Seems like we're creating this bull flag here to just break out and soar. So I'm going to be looking to gather some silver if I think we're looking for some type of weak CPI. I consider accumulating some into, or I guess before CPI, but if CPI comes close and I don't have a cushion in between my position and the price, then I'd probably get out, because I don't like to gamble like that. However, if I can start accumulating some silver around 21,053 and just accumulating this area, you know, I'd want to see silver sitting around like 21, 26, somewhere up here, to give me a little bit of a cushion to get out if price is pretty crazy. I really want to see CPI cool down so we can get some freaking crazy plays in here. 2 a.m. you had a nice drop through these lows, pretty big hourly bearish candle, and now we're grinding our way back up to fill this move here, finding support here. So it really feels like silver is poised to just break out. And that's why I think you've been seeing gold just consolidate at highs here and not feeling its move from Tuesday, because it's ready to just have another leg up. But on the upside, I'll be trading silver over gold. My money is going to be on metals as well. Gold and silver. They'll both move the same. Really hoping to see a nice rally in metals today. Putting my chips on the table. Haven't thought of silver. Yeah, silver, they trade they trade more or less the same. Although I trade gold. I'm a gold trader. But when the gold to silver ratio is elevated, and it still is elevated, then silver needs to outperform gold to bring it down. And if you take a look at the gold to silver ratio in here, we've been creating this nice trend line, creating these higher lows. We had just broken that trend line here, broke structure, now sitting on top and respecting this structure. This is expected to come down. Agreed? This technically is looking very nice to come down. And if that's the case, guess what has to outperform? Silver has to outperform gold. And so I'm going to make so much more money buying silver on the way up than I am going to be buying gold on the way up. That's why I'm trading silver right now. Same thing. Once a gold to silver ratio is leveled out, I'm going right back to trading gold, because gold, I like gold. But right now, if I'm expecting a rally in metals, I'm going to trade silver, because I'll probably 3 times the money I would have made in gold. Silver's setting up better, in my opinion, technically. It already filled its move from Tuesday. It's finding support at 21. It's wedging in here, ready to just pop. I just feel like silver is setting up a little better for me. Four-hour finding a lot of support and exhaustion here, so I will look to pick some silver up. I mean, the inflation, we hit 9.1, 8.5, 8.3. 8.2. So if I'd love to get like a 7.9. They're forecasting 7.9. So taking a look at gold on October 13th. Here's gold CPI. It puked because it came in, they were expecting 8.1 from a previous 8.3 and it came in at 8.2. So hotter than forecasted, but still cooler than previous, and you could see that gold puked. So I'd really, if I want to see the metals rally, I would need to see a 7.9 or lower. Otherwise, well, might not end up getting that pullback. But ultimately, if you take a look, it did retrace that move after the big drop, because although it was worse than expected, it was still cooling off. So you saw the initial drop and then it filled it. "35 minutes left. Getting close, getting close. I want to start seeing some movement now that we have 30 minutes left. I'd like to start seeing some type of action or breakout or something. Seems pretty muted out there in everything other than the dollar, of course. I mean, the dollar's consolidating now. It had a nice move overnight, but everything else is just kind of chilling. What's the VIX doing? VIX is a little elevated, chilling though. Calm before the storm. Call it up, then we'll lose my whole money. I hope 8 or more. Well, that's not good. Yeah. Oh god, that's not good. You'll lose your whole money. So what are you, like, over leveraged in a short? Where are you short from? Oh my god. I don't want to root against you because, you know, I don't like rooting against people, but I'm kind of hoping for silver longs. You should never be leveraged into a position so much to where one play happens and you lose your whole money. So if that happens, I'm sorry, but, you know, take it as a learning experience. Looking to see if the Dixie is looks like it wants to start falling off here, creating these lower highs and these rejection wicks towards this 110.95. So that should get a little bit of a lift in metals and equities. So hopefully we can get some type of movement heading into CPI. Dixie gives up this 110.827 area that it's teetering right now with, then you'll probably see a nice drop in it. Nice pullback to retest this breakout. Alrighty, 8 o'clock volume now coming in play here. Hourly closed bearish engulfing on the dollar, so should start seeing a pullback on that and a retest of its breakout. Showing a lot of exhaustion in the equities here with these higher lows, so maybe you start getting a little bit of a squeeze. Gold bullish engulfing, silver bullish engulfing. So maybe we get this hourly bullish volume come in. $30 minutes left till CPI. Dow bullish engulfing, creating these higher lows and exhaustion in this area here. So I'd like to see the Dow get a little bit of a squeeze. All right, going to bring Mike on now, and Mike's going to be joining us for CPI this morning. So let's see if we can bring him on real quick and get his input on the market. All right, Mike, you there?
Yeah, what's going on?
All right, what's going on, man? How you doing?
Doing good. I'm already up. I had a nice positive trade on this bounce on the ES. So, just nice tight range on the ES. Pretty much 37.67 to 37.60. Just flat view up in the middle there, and
Yeah,
just been trading that.
yeah. It's it seems like everything is just like really calm right now. You got the equities calm, you got oil calm, you got the rates calm. Yeah, it's just like it's crazy.
Yeah,
So-
it is crazy. Have we talked CPI yet? I mean, it's the story of the morning, right?
Oh, is that what's going on today?
Yeah, there is. I heard there's a rumor something's going on, but
Always something.
well, it's going to be good. And we've done really well as a fund, trading and predicting. Where I guess the last 4 or 5 CPI prints, we've done great. Not that we're in a game of predictions, and not that anybody should be in a game of predictions. We've just been had a good pulse on it. Because the bottom line is we've been trading. Well, at least I have. I don't know about you, Ty, but I've been trading for 30 years, and we've seen many of. We actually have seen the markets when there was I remember when interest rates were over 10, 11, 12%. So we kind of had a good gauge on how CPI is calculated and how it works. So I don't know. Last CPI, we weren't as confident. Remember, Ty?
Yeah.
I mean, we weren't as confident in that one. Surprise to the downside. This one, a little bit more confident, which makes me worried.
It's funny you say that because I was really coming in today like thinking, oh, we're going to have a hot print. Then I was like, man, like the charts are setting up just like it wants to be a really light print. Like, I don't know. I'm going back and forth here.
Yeah, I mean, look, it is the calm before the storm, right? And it's just like if you ever sat there when a hurricane's coming in, and,
Right.
It gets eerily calm, and the ocean kind of goes out a little bit, and then and then things start churning up as the eye comes in. So same thing here, calm before the storm. I mean, look, a lot of market participants are already pre-positioned last couple of days into this print. You got the institutions positioned, and so they're heavily. The problem I have is, and look, we're looking for a hot CPI print, okay, and we'll get into that, I guess, in a minute. But there's a lot. The way market participants are positioned now, the put to call ratio is 1.3 the other day, which is extreme. I mean, market participants are expecting a hot CPI print and are positioned for it. So I don't know. That makes me worried.
I'm keeping an eye really on the forecast because since August 10th we've had 9.1%, then it went to 8.5, then 8.3, then 8.2, And so we've been cooling off, but we've been cooling off slower than expected because we end up getting actual more than hotter than forecast. So it's really going to be interesting to see. Maybe we do cool off, but it's going to be hotter than we expected still. So I'm going to see if where we land around the 8% mark.
No, I agree. Look, I mean, it's at the consensus 7.9 on the headline. I mean, maybe some people say 8. So I think 7.98% on headline, which is 0.6% month over month. If we see that, we rise.
Yeah, right.
Okay, I mean, no doubt about it. Again, don't forget the way this is just like a Fed day, way the algos trade this. Things can, you'll get the big moves up and down, but then you'll get the real move. But 7.98%, it is cooling technically, and the key is the core though, and that's what the Fed is honed in on. The core is expected 0.5% month over month, which is 6.5% year over year. So Goldman, you see a bunch of people, Goldman Sachs is looking for 0.44 core and 0.49 headline. So they're looking for a dramatic cooling print. So that's going to be interesting to watch as we go forward.
They're looking. Wow, they're really looking for a cool. Huh.
Yeah, I mean, look, the reason we're looking for hot is, if you look at gasoline prices over the last in October, and again, this is the October CPI print. If you look at gasoline prices, they rose 21 days straight in October. Okay, and gasoline and energy, that's the reason they exclude that at a core is because that really affects it month to month. It kind of you can get a quick bid, and if you look at the last 3 prints, the gasoline and of that portion of the energy has really helped and dramatically helped cool the CPI. Now you had others such as shelter and rent, which is over 30% of the CPI still running hot. And so, I see from a temporary, from the shorter term variables that gasoline portion is going to come in hot. And then, I pulled this off. If you look at the commodities month over month, you can see, 10%, 8%, 7%, 7%, 6%, all the way down. So you can see right here on this chart how the commodity index in October has had a really hot run on prices. Okay, now with that, to counterbalance that, you got used car prices, which have just dropped dramatically.
Right. Yeah.
Yes. So you get 2.5% in October. But the issue is, with shelter inflation, rents have actually come down the last 2 months. But rent, the way it works, rent typically takes about 6 to 8 months to catch up in the CPI print, and it's a lagging indicator. And so, that's the tough part. And then we've also got the Cleveland Fed, which has been a great indicator for CPI. It's been great for us, forecasting 8.1%. And they're at the last 19 CPI prints, they have been low 16 out of the last 19.
Dude, if this thing comes in over 8, like 8.1, 8.2, then we're in trouble with the market.
Yeah, I think, what, again, what I'm looking at, 7.9 to 8, we'll bounce around a little bit, but I think that's really could set us up really good for a 1 to 2% day.
Yeah.
Okay. And what's good about that is it really doesn't change the market dynamics of what we're looking at, right? So we were looking for that temporary little pop up and then that rejection. We're still calling for new lows because the market's still broken and we still got major issues, but it doesn't, don't let that cloud your judgment of where we can go in the short term.
Right. Agreed.
But I mean, if we get that 8.2% or 8.1, 8.2, then I think you're looking at maybe a 1 to 2% down day. If you get higher, then bar the doors, because it's the market's
Yeah, it's weird because since August we've had cooling off of the headline CPI, but then August 10th you have of the core CPI 5.9, and then 6.3, then 6.6, and it's like the core is slowly heading up. And so will the Fed, will the interest rates eventually work their way into the system here and bring it down, because it's slowly increasing here? So it's going to be interesting to see.
Yeah, I mean, look, they're definitely going to, here's the thing, they're definitely going to have an effect, and they're having an effect. I mean, I think everybody, if you look at the numbers, will agree that inflation has been coming down and has been cooling. But the issue is, again, if you look at the last time we've had this type of inflation, Volcker made the mistake of taking the foot off the pedal, and
right,
that brought it right back.
Right.
I mean, through the last time, when Volcker was fighting inflation in the 70s, he had to go through 2 recessions, because he had to go through 2 different tightening phases, because they did take the gas off the foot off the gas, and it made it come back even stronger. And then that's when you got real problems. So we don't want to be in this. We don't want to have the 70s where it's just growth just languishes and is gone. Trust me.
Right.
And so the Fed, that's why uncharacteristically has continued talking this market down, has continued to just, in spite of slowing growth, to keep going. And don't forget, last Friday, we just had non-farm payrolls that was even stronger than expected. So all signals are still flashing for the Fed to do what they're going to do. And, the reality is the Fed needs the market to go down. The Fed needs financial conditions to be tight, and they need a recession.
Yep.
That's how they beat inflation.
Yeah, definitely agreed. But Mal, you're right. Crypto was a smokescreen for them to come out and saying, hey, we're not taking the foot off the brake here, guys. All those Fed speakers coming out yesterday.
Yeah, but, I mean, and we got a litany of them today.
I
put it in Discord for everybody to kind of see, and
so funny.
It's just crazy. So it's like Mal said, they're there to kind of shoot down the market. I mean, look, and yeah, Bornholm, I mean, different era, right? But the question is, definitely a different era. But the question is, now we've gotten past the midterms. Okay, so what does that mean?
Yep.
Does that mean that, okay, we don't have to be temporarily dovish like we kind of were, and we just now continue to just keep doing what we're doing? Who knows? But it's going to be interesting. And the key is just let the print happen, and we'll have to adjust from there.
Yep. 15 minutes left. Good morning, Mark. Good to see you here.
All right, Mark's in here, man.
We got a resident. We got the bear in.
Yeah, we got the resident bull. We got the resident bear. We're looking good. It's gonna be pretty good. Got a nice little pop here as as you get closer, they start the algos start going wild.
The dollar's dropping through its support level here, so you're starting to see a little bit of pop and things.
I don't know if you saw the Irish inflation was like 9.2% or something like that. I guess the pints of beer now is just going to be through the roof.
Oh, well, they'll still buy their beer.
Speaking non-Fed for my stock guys, and I don't even see New York Chris in here. So, but anyhow, for my stock guys, do you see Vero? The stock we were trading the other day? Nice little drop, man.
Oh,
it was halted yesterday. FDA, bad news. Basically dropped from 15.
Shit. Oh, that's the one that was halted.
Yeah.
Ah, shit.
So all kind of cross currents going on here, right?
Dang. Look at that.
Yeah, pretty crazy, but yeah.
Yeah, I was watching the rates, dude. It's everything's really just kind of technically, dude. If I came in and be like, okay, dude, I'm looking at technicals here, dollars going down, rates are going down. You know, we're going to see a nice pop in the market here, but it's like it's just killing me here with these technicals because I want to see inflation cool off so I can get these fun plays.
Yeah,
But
I mean, you kind of feel like the handcuffs are coming off.
Yeah, right.
It feels like we've had handcuffs. It's just been dreary trading in the morning, leading up to this. So I'm definitely excited for what we've got here.
Oh, there's Chris. Yeah, he has.
He's been sleeping.
Well, yeah,
he's tired. He looked tired this morning when we had our meeting.
He put his good morning in at 7 o'clock and then went to bed until Mike came back on. He's like, oh shit, Mike's on.
And yeah, and I don't see Simon in here. Simon wasn't in our morning meeting either, so Simon must be like, screw it.
What, are people taking the CPI day off? Come on now.
Yeah. So I don't know.
What's up, JT?
JT in the house. JT ready to do some trading.
He's ready to make some money today. He's like, all right, guys, what are we trading today? Market's at the high of pre-market here, looking like it might want to break out ahead of CPI. Come on, baby, give me something.
It's coming right back down.
No.
It's coming right back down.
It's been so dead this morning. Like,
crypto has been, where you got Bitcoin at now? Because the Bitcoin futures dislocated from Bitcoin price.
It's weird. I'll see. Bitcoin's at 16,474.
God, I see the Bitcoin futures are at 15.5.
Yeah, I know. You said it hit 14 something yesterday.
Yeah.
Yeah. No, the lowest hit for me yesterday was 15,632.
Damn.
I don't know what's going on with your fucking.
The futures are something screwed up, man.
Future price over there.
The futures, Bornlon, maybe you can explain that stuff to me, or Mal. I mean, the futures. You got Ethereum up 9%. I got Ethereum up 4%.
Yeah, mine's up 9 also.
Yeah.
That's funny. Bornlom, I will 100% be trading CPI. Yes. That is a yes.
Yeah, I think I'm trading CPI. I got a nice little
on.
buffer, too. So, trading in the pre-market here, I got a nice little buffer to kind of,
Yeah, I got
piss away if I want.
Do monkeys like bananas? I mean, do I want to trade CPI? JT, yeah, Bitcoin, I think, or Swim says it went lower. Yeah, look, my Bitcoin price is the right price, okay? So all you stock traders trying to find out what the Bitcoin price is.
Yeah, all us
novices
that are looking at the Bitcoin futures.
I got you.
What's interesting is, Bitcoin, talking about Bitcoin. So, I mean, look, that dude's going to jail.
Oh, yeah.
No doubt.
Yeah.
I mean, if you look at some of the interviews and you look at that guy, man, I mean, how do people put money? But, I mean, funds, we're starting to see some big hedgies now write off their investment into FTX, which is crazy. So you're going to see, and again, we've talked about this before in other situations, that could lead to those funds selling additional assets to meet redemptions and stuff like that. So I don't know, man. It's a crazy situation. But with Bitcoin, typically the floor is the production cost, right? And the production cost is around 15.5. So, because really, you're basically going to see people, if the price falls below 15.5, you typically would not see people, if you're running machines, it's costing you to mine something that will reward you with, you're going to take a loss on it. So,
right.
You see a lot of people then hit the pause button on that. So, it's interesting to see, but I mean, it's definitely had an effect on the markets, which
oh yeah, without a doubt,
is kind of surprising to me. But getting close here to
well, yeah, Mal, that's pretty much what he was saying.
what's that?
No, he says I'd see it the other way. If price drops below production costs, the network might collapse. Yeah, but network's
Yeah,
because no one's gonna be wanting,
exactly. Yeah, sorry if I wasn't clear about that, but that's exactly what I was saying. That they're pretty much going to shut off the machines.
the
and
miners
stop
won't be
mining.
running anymore, right? Exactly.
Yeah, especially, and that's a death knell, and that's something I don't see a lot of people talking about with crypto and Bitcoin, right? Because with energy crisis, with energy prices increasing dramatically, that's when that really puts a crimp on the whole mining operations and the companies that do that. So you've seen Riot and Mara and all those companies that are pretty much just miners right now. Just the stock prices have dropped to the bottom. But the question to me is Coinbase going to get? I think Coinbase goes even lower.
Yeah.
So good trade New York Chris on Coinbase on that short yesterday, because that was a good one. That was a good one.
Oh man, we're getting my silver ramping up ahead of CPI. We got 9 minutes left. I'm like a kid in a candy shop right now.
Yeah, me too. Right. It's getting exciting. Ty, you want me to put a chart of the
take it over and show us what you're looking at.
All right, hold on. Where'd the 10-year go? It disappeared on me. Hold on.
Order failed.
Yeah. You'll see them flash on the screen down below.
Don't worry, guys. You'll know if Mike's trading CPI or not.
Hold on, I'm just trying to fix these. I hate Thinkorswim the way the charts are set up. I mean, come on. All right, there we go. We got the dollar rolling over.
Good, dude. I need the dollar to fucking just take a big shit today.
Well, expecting, the VIX should get a nice big old crapiola. So, all right, let me, so, Ty, tell me what you think here. This is, pretty much got the rates, got the 10-year, got the dollar.
We got the market makers calling you over there.
Got the VIX, and yeah, I got the market makers calling me.
Yeah. Yeah. So, you got the screen. You got the setup ready to go.
Setup's ready to go. For those of you, hold on, I'm trying to find the right chart. I should have done this ahead of time. I got 6 screens. And for somebody now, as I gotten older, I just, I can't manage them all. don't ask me what's going on. So, all right. So here we go. Oh God. Don't they know it's? Oh, so what movie is this on? Don't they know it's CPI day? Who calls during CPI?
Yeah, Wolf of Wall Street.
Wolf of Wall Street, right?
Exactly. Harith. What do you think now? Look, man. I told you what I thought, that I think gold and silver is going to start popping here, and they are. And you shouldn't be in a position to where if gold goes up, you lose your entire account. So, Mike, you weren't here, but Harith is in the chat earlier saying he needs gold to go down because if it goes up, he's going to lose his whole entire account. So, I mean, man, look, I'm sorry. Like, I don't want to see you lose your account, but if you do, take it as a learning experience.
Yeah, look, Arif, we have all blown accounts. Okay, that's part of the process of being a trader, and to stay in this game long term, it's all about risk management, and you should never have yourself in that position. And that's the hardest thing that's why so few traders make money day trading, right?
Yeah.
So, it just sucks.
Yeah.
It just sucks. But if you want help, just, email us and we can help you out. We don't charge fees or anything like that.
Yeah.
we don't want to see you blow your account out, man. That really sucks.
Like, okay, then I should pray. Exactly.
Yeah.
Go pray to the chart market gods.
So, yeah, pray to the chart market gods. You need a sacrifice. You need a sacrifice. But that's why we kind of do this stuff, right? Because we just, we don't want to see people have that painful learning experience. But you know what? It is what every trader pretty much goes through. I've had several blown accounts, and I've been trading since 2000.
Oh, yeah, dude.
Late 90s.
Trust me. It's all part of the process. As long as you learn from it.
Yeah, started out as a market maker on Wall Street with Lehman Brothers, and then You know, fast forward, God knows how many years later, 30 years later, I got a hedge fund, and you know we've been day trading. But yeah, it's all part of the process, and you don't ever want to get yourself in that position. Looking here, Ty, I just want to give some levels out on what I'm looking at. You know, here is the 30-minute chart on the ES. What are you looking at if you're looking at this 30-minute chart, Ty?
Yeah. So you have. So I was looking at it earlier, and the area we're at here. If we give up this 37.57, anytime you give up this area here that we've been in before, which has been a strong area of support, you've seen price move very fast down to this 37.15 area. Same as here, we gave up this price point, moved very fast down to 37.15. So looking at it, if we give up this 37.57 low here, then it's, we probably get a pretty swift move down to 37.15, which is where we then might find some support where we find a lot of dip buying before. So that's what I'm looking at for the downside here. For the upside, it kind of the same story, but kind of reverse. So if we start pushing through this resistance here, and we start getting some buyers back in the market, then I think we come back up and we top out at this 3,800 area. This is where we topped out at this previous point here. We topped out here before. This is where this previous area of contention was. So when you move through this zone here, we have moves pretty quickly towards 3,800, and then we hit a wall. So, I don't, I'm looking towards 3,800 and then towards 37.15.
Awesome.
For myself.
Yeah, I kind of same, so this is the 50% retracement of from the bottom of the last CPI print to the high, and then, where we retrace. And this is where we, of course, as a market found support. So to the downside, this 3714, if we get a hot print, you're going to want to watch that. That's probably the first area that I'm going to be buying out of if we get a drop into. So I'll probably have an order sitting there for a temporary bounce, and then, try to see if we get a push up. So that's definitely an important area. I agree with you on the other areas. I had 37.55, but 37.57, right in that range. I agree with you. That's kind of my breaking midpoint. If we get back above 37.55, 37.57, then I think we get a little. That tells me that okay, we're in bullish territory. As far as where we could go on a high side, don't count out this 39.27.28 area. That's kind of sitting up here at the top of this range. We could quickly fill through those.
That better be a fucking a weak print on CPI if we're heading right up to that baby.
Yeah, no, without a doubt. And then also 38.67 the upside, 37.77. If you look in here, we've been trading pre-market just kind of in this range in here. So. It's been a flat now. VWAP's kind of pointing up, but we do have some higher lows. We have expanded up to this was, by the way, this was Monday's low, and it also is kind of been a lid for us on the pre-market high here. And if I expand this chart out a little bit, I'm not going to expand it out because you know what, we are 45 seconds.
Oh shit, that's right. I didn't realize what time it was. Oh dang.
Yeah. So let's get our trading shoes on. Don't gamble. Wait. Let the print do its thing. And let's see. Ty will call out any trades he's doing.
I'll be watching gold here. Oh shit, man! I'm getting excited. We got 20 seconds left. All right, let me pull up my tweet deck.
Wow, look at the VIX drop off, which, you expect the VIX to drop off in, as the event now will be pretty much coming in.
Here we go. All right. Prices, it's out. What are we doing? Oh, wow. Wow. It's soaring.
Holy
shit.
Hold on.
Oh, baby.
We are soaring.
That's, oh shit! Holy shit!
7.7.
Holy shit! 7.7, dude. Holy shit!
7.
I don't even know what to say right now, guys.
Baby.
Holy fucking mother of God! Excuse my language. I am shocked.
Wow.
I am absolutely just
all right.
blown
Where did
away
I say
right
we
now.
could go?
Mike, you know what? And I said you need a really cool print, and you got it, dude. You got that cool print you needed. Holy, guys.
Here we go.
I am just.
Bulls just
this
got
is
a gift.
Wow.
Yeah, I got everything. So I got a nice little trade-off in that upswing.
I got a fantastic trade, guys. I was long silver and the Dow heading into this. So I was on the right side of the
and we took our profits, by the way, guys.
Yes. Oh, yes. I took profits. I am out.
Wow.
Holy shit, dude. That's insane.
Wow. Now, you know, it's kind of hard. We're butting up into this resistance in here. Wow. It's, you know, let the market do its thing.
Harith, I'm praying for you, buddy.
What's gold doing?
Gold's soaring, dude. I was long silver. I was long silver going into this, man. And that was beautiful. Silver is my baby now.
Crazy.
Wow.
Crazy number of levels that we sliced through. I mean, just absolutely
holy cow.
insane.
I mean, normally, David, I would agree with you. CPI good for a fade, but I mean, this number is insane, dude. 7.7. The core came in at 0.3. Like, I mean, I don't know, man. I mean, it's just like maybe we faded. Obviously, I think we faded eventually, but I don't think we fade this right away. But maybe we do.
Well, you're gonna get some profit.
I mean, you're going to get, yeah, exactly.
Get some profit taking coming in. Dollar falling off. You got so you know this is going to reignite the you know taper. You know, time to come in and taper and you know start slowing up on the Fed. So we'll have to see how that reacts. But right now, just
wow.
There's big bars,
dude.
Everywhere.
I'm gonna go have a fun. I'm gonna smoke a cigar after this.
We are gonna have to. This is crazy. So, nice little bounce off this area here, this 3840 area. Still waiting for the markets to kind of calm down so I can kind of draw a Fibonacci.
Yeah, Mo. Inflation dropped pretty heavily today. Wow.
Nice day. I guess we don't have to work the rest of the day.
I'm celebrating the rest of the day, dude. I banked today. Banked. Absolutely banked
Still
today.
waiting to get back in though. Still waiting for like a second, but I'm not going to trade my profits away.
Wow,
I mean,
dude.
just incredible.
Wow. I mean, incredible.
Yeah, I mean, look, Mo, I think it definitely brings out the buyers. I don't know how it can't. AMD soaring right now, up from 59 to 63. You got Tesla, which was in the doldrums, getting a reprieve. You got Apple getting a reprieve. You know, it's kind of hard, you know, to chase this in here though.
Yeah.
So I'd be careful. I'd let it kind of filter out here. But I mean, look, inflation's still at 7.7%. So even though it did come in lower than expected, you still it's still high, and
Yeah.
the Fed's still going to do their
right.
thing.
Born alarm. Yeah. Silver paid me 15 grand compared to that. Yeah. So 3% on silver, 1% on gold. I mean, it was absolutely insane. CPI, Harith, CPI came in at 7.7%. So that's why you're seeing the rise and everything right now. What, I didn't even, do I even look at the dollar? I didn't even look at, because I'm too busy trading gold. Do you see the dollar?
Oh yeah, yeah.
Holy shit!
It's just complete cliff dive.
Cliff dive. It's great. Oh my god, I lose my voice over here. I'm just blown away on a 5-second $15,000 trade.
Yeah, this is
wow.
Look at Bitcoin run on the number.
Everything ran on yeah, everything did. Oil ran. Everything's running on this.
So I don't even need these bottom levels.
Nah.
Why don't you even have it on there?
Yeah, exactly. I don't even know. I gave a downer expectation.
I knew it's going to screw up my charts now.
Exactly.
We're like freaking 120 handles away from where we were on this fuse. But
wow. Back to all-time highs in a day. You're right, Mal. Damn, DAX is up 3% too. We're even moving the fucking foreign markets.
Right.
Or the Hang Seng's up 3% also.
See, I'm going to stop here because I'm going to wind up chopping around my profits.
Dude, I'm still sitting in some. I took like 90% of my silver off, and I'm still sitting in the sums. I mean, David, not sure you mean CPI is untradeable unless I'm about to short against these moves in Forex, because, I mean, it's as tradable as any other market. As long as you're trading a pair against the dollar. If you trade commodities, there's definitely some trades out there if you're looking for them.
Yeah, it's definitely. I tell you what, though, I get his feel, right? Because now you're like, okay, we need some kind of retracement in here. It's kind of like I just got chopped up trying to, pop in because I'm getting freaking bored. So,
funny.
Yeah, I definitely understand your thought process in here, but
Oh yeah, right. Like, okay.
It's like, how am I going to trade now?
Yeah, no, I get it. It's like if you're not pre-positioned, which is more or less a gamble, then it's like, what the hell are you supposed to do? At this point, what I do is I'd wait for 15 minutes, David. I'd wait for 15 minutes to go by for a 15-minute close and start getting some settling down of price. And once it starts settling down, it's the same way I traded the last, I think it was the Fed move, is price shot up. I let it settle down, and then I took the shorts down on gold. And so you just got to let it settle down after 15 minutes and then start looking for some type of retracement, like Mike said, or look for a retracement for longs. But definitely, it's definitely tough way to trade. If you're looking at one freaking bar that's freaking 200 pips. I hear you.
So Goldman was spot on her analysis.
Yeah, dude, that's crazy.
So that's the first CPI that pretty much we thought was going to come in hot. It didn't. So
it didn't, but guess what? I still banked on it.
Oh yeah, because you got your stop runs. You have to do a video on that.
Dude, I wish I would have recorded my screen on this. That was insane.
Yeah, something tells me though. Something tells me we could definitely get a retracement.
Yeah, no, without a doubt. I mean, I like the way I'd play this myself is I'd wait for like a couple 5-minute bars to consolidate here and start looking for that. I'd be looking for a short on that retracement. That's how I traded the Dow and and the gold on the Fed day when we had the large move.
Right.
Mo, do we buy here? It's pricey.
Yeah, I'm not
I know
buying
you're
in.
joking, Mo. Because oh man.
So CPI core rose for the 29th straight month, just to kind of give you an idea where we are. But we are off our 40-year highs, which is nice. Just trying to go through the report a little bit. Rent inflation was even higher, went up from 6.59% to 6.92%. Shelter went up to 7.52 from 7.21. So we were spot on that. What I'm trying, used car prices. We talked about used car prices, how the prices had dropped the largest ever on record. So definitely had a big effect on that.
Yeah. Right. Dude, I'm still trying to process what happened.
Yeah, I'm still trying to process.
Crazy. I forgot unemployment claims came out. Right.
It's not often you see 100 handles in like a blink of an eye.
Right. Wow.
Just going through, trying to go through the report here. The dollar continues, Ty.
Yeah. Dollar has some catching up to do because it's still inside more or less. Well, it's not anymore. It was an inside bar from the last couple of days, but now it's breaking the lows. I want to see the dollar come down to like 1083.
Ty, I'll let you take over the charts if you want.
Sure. I'll show you the trades I took, and I'll also show you what I'm looking at. I got to figure out where the share. Transition. Share. All right. So basically, what I'm looking at here, I'll show you what I'm looking at first, and then I'm going to show you the trades I took that made me like fucking 30 grand today. So the dollar here, so we're coming into this 108.5. We probably hit it today. This is going to be the area. So it's going to be really interesting going forward what happens here and where we close today. If the dollar closes engulfing below 109.5, I think we see a decent pullback. Now 108 is going to come into a play, and that's going to be in heavy area. That's going to be a heavy area of support to keep an eye on because that's been the major pivot point lately that the dollar's been holding as support. And so if we come down into 108, which is likely, then I'd expect some type of support, and we'll see what happens there. Because I talked about it the other day, is I'm looking for a steeper pullback on the monthly to actually come down and retrace some lower levels here. And this could be the start of something that gives us that pullback I'm looking for. And so 108, where we see all of this dip buying and liquidity, going to be the main area to watch coming into recent prices to see, what levels to hold. Now, once we start breaking through 108, then I think we start seeing 105. So 108 is really the last level, the last line in the sand for me that we have to hold if we want to remain any bullish moves on here, because we are now breaking this trend line here. And so now what you can expect is a move down to 105 to retest the most recent point of intersection here, and then we'll see what happens from there. But I think this could be a start of a continuation down here in the dollar, which would give us a nice rally in metals, is what me and Bornalam were looking for. Still bullish overall on dollar. I'm still bullish overall on the dollar. I still think we continue higher, but I think it's due for a pullback. I think this is a good way. I mean, look, the dollar's been rising really hard off of the Fed's expectations. Either they keep ramping up their interest rate hikes. They keep, they're still fighting it. And now when they start coming down and rolling over and not hiking as much and slowing down their pace of hikes, then I think we start seeing a little bit of a cool off in the dollar. And I think that's why we're seeing that today. And today's print kind of signals that, hey, the Fed's right. They can actually start probably slowing down a little bit, and the dollar's going to get a nice pullback here. And so that's why I'm looking for that dollar pullback, because rates, same thing. Rates are pulling back here as well. Rates are now at 3.9, and I think they continue lower. I think rates could even go down to 3.7, 3.6 area with this news. So going to be something to keep an eye on with the dollar. And so the trades I took today, so silver was one of them. And so I positioned myself in silver this morning based off of a couple things. One, we had these previous highs sitting at 21 that we were just sitting on top of. We had already come down and filled this move from Tuesday right here. We came down, filled this move, and we're finding support there. So this morning, I had taken a long position right around 21.066, right in this area here, expecting this squeeze up. And so I told everybody on the show this morning that I'm not going to hold this position unless I can start getting some comfortable room away from where I'm at, because I don't like to gamble with news events like this. And look, silver was ramping up out of the trend line. It was getting some strength in front of CPI, and then we got that move, and I had a take profit order sitting right on the break of these highs here. And so I took some profit right in here, and I still have a position running right now that I'm looking to potentially take up to like 22. So that was a $15,000 silver winner. I was also positioned in the Dow this morning. So the Dow, we were maintaining these higher lows. We were consolidating. So this bottom here is the 200-day moving average on the daily. And so I was expecting that to find support. We were creating these higher lows and starting to wedge up a little bit into CPI. And so right in this area here is where I had taken my initial position. Then my take profit, I had a take profit sitting at 33,085. So right up at these highs in here. And it hit it, and it called me 15,000. So killer day today on CPI based off of trying to take what the markets are showing me ahead of the print and using it to my advantage, and it worked well today. So I'm happy with that. Overall, though, 15-minute closed, and we're starting to see these descending highs here on the Dow. So this could be an area where you start looking for retracements. Maybe you see this break here, the neckline, you start looking for shorts for a retracement down. Looking at the ES is they're maintaining higher highs here, but it's getting weaker and weaker on the move up. So this could be an interesting area to start looking for a pullback. But obviously you're fighting against fire here and you're fighting against the trend, so be careful. But to me, that's really, it's the only play I like to play during these type of events. But yeah, that's my 2 cents on everything.
Awesome.
But
well, it's
yeah.
definitely been an interesting day, and it's going to set us up, man. I'm just, how it's going to set us up is going to be interesting.
Yeah, for sure. But yeah, I'm done trading for the day, without a doubt. So I'm just gonna sit back and watch. Let's see here. Damn, Ethereum's up 17%. Wow.
Yeah, just a huge.
Bitcoin's up 9%. They're getting some life in them. See. Euro USD is back above parity for the foreseeable future. Yeah, yeah. Euro USD is probably going to hold parity for a little bit if we see this continued weakness in the dollar. I mean, look, Euro USD. I'm not. They broke through. I'll just show you again real quick. So they broke through this, this trend line here, found some support at this more or less parity level. Now we're rocketing up. So Euro could get a little bit of a lift off in here while we see a pullback in the dollar. And if we can break through this recent point of intersection, I'd look for a move back up towards like 1.035. So Euro could come in play soon and start getting a little bit of a ramp up. But overall, again, the daily 200 sitting right here. So maybe we get a ramp up into this area, and then we start rolling back over, and that's when the dollar might pick up again. So we'll see, but that's what I'm looking at.
What do we do with all these gap ups, Ty?
Yeah.
No, I don't see the housing market bounce back. I mean, look, we're in the probably fourth or fifth inning of this whole thing, Mo. And you're going to have gyrations. You're going to have things work, not work, and stuff like that. But, I mean, housing prices have hardly come off. So, and, I mean, if you talk to any mortgage broker, they're dead, man. There's no loans going off. So, you haven't seen the housing correct like you would expect from a price standpoint. So, I think we got we still got some downside, but today definitely a good action. It's good that we're seeing CPI come down because we need it to come down. But don't get it wrong. You're still at 7.7% for the year over year. So we still saw a rise, and so the Fed still got some work to do. But at this point, I'm drawing some Fibonacci's. I'm going to be looking for a 50% retracement to maybe trade off of. I mean, that's all I can do. I mean,
yeah, right.
It's hard. As a trader, we're taught don't chase, right? So it's kind of hard to jump in here and trace and try to chase now.
Yep. Wow.
Yeah, I mean, look, Mel, I mean, interest rates drop, then housing bounces back. I get that, but I don't know that interest rates are going to drop. And prices have not come down in proportion to where rates have gone. So you're still out of whack. Even if rates drop a little bit, you're still out of whack as far as the affordability of housing. So I think housing corrections just started. I think we got a little bit more to go. And don't forget, we're still possibly getting ready to head into a recession.
Yeah, exactly.
Disney off the lows up to 89 after that crappy ass report.
Yeah, Meta.
Meta. So Mark's got to be happy with it.
Right.
Meta, so Mark's got to be happy with Meta.
Oh, man. Man, oh, man.
Say that again.
Mark said recession canceled, soft landing time. Oh, man.
Mark said soft landing time?
Yeah, recession's canceled, soft landing time.
Love it. Love it.
Oh, man. Well, I'll just give your final thoughts because I want to hop off and get some stuff done.
Yeah, guys. I mean, just watch the dollar, watch rates. Just, I mean, we're obviously holding up on such a strong number. I think there's going to, I think, remember, you want to remember, put yourself in the eyes of the market maker. So what's the biggest pain trade? Okay. Once retail, the RTH session opens up, you could definitely see some profit taking on the open, possibly.
Yeah.
So just be careful. Don't chase. Look for good levels to get in on retracements.
Yep, without a doubt.
And we'll be in Discord. And we'll see you at 1 o'clock, guys.
Awesome. Well, thanks for tuning in, guys. It was a fun day. I'll see you at the 1 o'clock show. And safe trading out there, guys.